Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Tuesday, March 22nd, 2022. Market staging another solid update today. S&P 500 up about 1.1%. The NASDAQ is up about 2%. So again, tech stocks are leading the charge today. And then we see the Russell, which we'll talk about in a minute, but it is lagging just a little bit. In terms of the price action today, a majority of the upside was gained in the gap up and then this first move up. And if you look at this first move up following the gap up, it's really been sideways chop since then. Right? We've gone down a little bit, we've gone back up, we've gone back down, and now we're inching up just a little bit. So again, really consolidation the remainder of the day. The main upside was given in the first hour of trading. Now again, what's the happening part of this? Well, again, I think there's somewhat of a flight back into technology stocks that have been beaten down. You guys know that I was buying technology stocks like crazy. We've unloaded a lot of them, but we're still holding some of them, absolutely. But again, the markets to me are getting very, very short-term extended. All right, this is a classic bear market rip your face off rally. Yesterday we were wondering if the candle was a doji, which was a reversal signal, or if it was a pause day. Clearly a pause day, but now you're getting some of these technology stocks to come into time counts. And time counts, for those of you that know the methodology, that's starting to signal that period when you likely will see a pullback. The other thing I'd like to bring up to you guys is, again, you have the S&P up about 1.1%. The NASDAQ, and let me just bring up that chart here, the NASDAQ is trading up a beautiful 2.05%. But then if you look at the Russell here, the IWM, the Russell, which is usually a leading indicator, is struggling. In fact, it's even up less than the S&P 500. And usually the Russell leads the charge, meaning that if you remember going back a week before this rally started, I took note of the fact that the Russell was pushing up. It wasn't coming down to the same lows that the NASDAQ and the S&P were. And it kind of gave us a heads up to continue to accumulate those longs at that point and look for the big bounce. Now, we have certainly gotten that bounce. It has been an epic bounce, but now the Russell is arguably starting to lag just a little bit. And if you look at this intraday candle, this was or intraday chart, this was a pretty nasty sell-off on the Russell where it almost got back to the flat line before rallying back here. And even with the rally back, it's still up less than the S&P and far, far less than the NASDAQ 100. So again, you couple that with some of these daily charts that I'm going to show you, and you have to wonder if it's starting to signal potential exhaustion in the short term. If you look at bigger technology names, Google's up 3%, Facebook's up about 3%, Apple's up 2%, Microsoft's up 1.5%, and Amazon's up about 2.3%. So technology's strong today, but I'm skeptical. And as you guys saw, what did I do today? Well, number one, we took profits on Nike, which was an awesome trade, and congratulations to another winner there. Beautiful move on earnings this morning. And then if we look at what else I did, I added to my QID today, and I added to my Tesla short. And QID is obviously 2 times short the NASDAQ 100, and Tesla is Tesla. So shorting Tesla, it has gotten ridiculous in terms of the move here. I will show us the daily chart here now on some of these names, including the S&P 500, and we'll take a look. So I was just playing around with some parallel trend lines here. Thought this one was kind of an interesting one where we've kind of come up here. This is the hourly chart to look at. And just again, we're just basically hovering on this. If you connect these recent lows here, here, and here, and then underbelly right here, that's actually where we're hovering, and then it kind of connects through these lows. I love just playing with trend lines and parallel channels and stuff like that because it really does kind of shed light on where we could go or where we are. Now, if we flip back to the daily chart, look at this move up here, folks. Remarkable move up. And again, 1, 2, 3, 4, 5, 6 up days, or 6 basically moves that were equal to this one kind of pause day yesterday. But again, today, a big move to the upside. But that's not the essence of it. I think Tesla's chart is very telling. Look at this. Tesla, 1, 2, 3, 4, 5, 6 straight up days on Tesla. Not only that, but it's starting to come into some resistance here. If we take a look at the chart from this pivot right here, look at this. So again, this is something that's catching my eye. pivot low, pivot area right here, and then you're coming into that. And look at this kind of blow off top. My guess is it'll probably pierce 1,000 tomorrow just because it's an even number. But based on a time count, based on the resistance, I do expect a pullback in Tesla. Obviously, I wouldn't have added to my short if I didn't expect that pullback. Granted, we still have a small position, just about 2% of the portfolio. But again, if it gets above 1,000, look for me to potentially add tomorrow a little bit more. All right, so that's one chart to keep an eye on. I think there's other charts out here that are very kind of stunning in terms of the massive move that we have seen. I think Apple is one of them for sure. Now, Apple did push above this trend line, but look at this move. 1, 2, 3, 4, 5, 6, all big up days, right? At least the S&P had a pause day yesterday. Apple has not. Tesla has not. A lot of these technology stocks have not had pause days, and that puts them in an extended period here. And one of the levels I'm watching for resistance on Apple is right over here. If we take this high pivot right here and put a trend line above, look at that. So you pierced it, and now you've pulled back basically underneath this pivot high right here. Doesn't mean it can't go higher, but again, look at that move to the upside, and looking at percentages from $150 to basically $170 at the high is a tremendous move for a company that's valuation is about $3 trillion. All right, just epic move there on Apple. So a lot of these stocks are showing that. I think it's also interesting that there's a disconnect going on today between tech stocks and yields. So I think that's also worth taking a note on. And what I mean by that is what we have today is yields are up again. All right, the 10-year yield it hit a high of almost 2.4% today, hovering at 2.377. That is an epically high yield. And you have to kind of think about it in terms of, okay, that's supposed to be a negative for technology. And technology has not dropped as yields have gone up over the past few days. So the question is, well, which one's incorrect here? Are yields mispriced here? Should we be down further on yields and tech stocks know that? Investors, big money maybe knows that. Or are tech stocks rallying because of some other factor, whether it's short covering, whether it's something else, and then they should be the ones to pull back? Maybe both. Maybe tech stocks have gotten a little overdone here and yields. That's kind of my hypothesis. I think that, again, yields are coming into major resistance at 2.4 to 2.5% on the 10-year. And also tech stocks on Apple, something like this move is not sustainable, and you'll likely see a pullback on this chart as well. Where could you pull back? Well, in the short term, I think the pullback would bring us right back here to about 162 to 163 on the Apple chart. Now, looking at the 10-year yield, I don't go over this chart very often with you guys, but it is worth taking note because we do have a major trend line that we are approaching, and you can see we're just about there. If I zoom out on this chart, this is a major trend line going back a long distance, basically at 2.4 to 2.5%, and again, I do think we get some good resistance right in there. So keep an eye on the yields. I do think right around that level you could see a pullback on the 10-year. And again, the question is, what does it coincide with? Does it coincide with maybe people starting to realize that the economy is going to slow down, therefore the Fed can't tighten as much as the market's anticipating? Is there some other factor out there? And again, this is what we have to find out. We know what the chart's saying. Now I'm curious to see what news coincides to create the move, to create the narrative that the media wants to spin, right? That's what it comes down to. So the media is always going to say, oh, well, yields pulled back today because we got this economic news, But the cool thing about it is we can actually see that move coming more often than not by looking at the charts. All right, so speaking of charts, as I said again, great move on Nike. But did you guys see Alibaba today announcing a mega buyout? And again, just absolutely monstrous move here. We're now in the money almost 10% on this. I'm still holding because I think there's a decent chance we could at least touch this trend line maybe tomorrow if we go up a little bit more. That's right around 120. But again, look at this, folks. Look at the down move. Look at this chart getting down to basically the low 70s and then just like that back to 115 to 116 today. Incredible bounce. Wild ride, though. I mean, listen, that was for a company of that, 200, 300, 400 billion dollar market cap to see these type of swings is like almost unheard of. It is absolutely nuts. All right. So anyways, we'll kind of continue there. I showed you guys some of these tech stocks on the spiders. Let's flip back to the spiders chart. And again, upside here, I do think, again, you're getting way short-term extended, but this is classic bear market action. And again, where could we go? Well, there's a couple lines to watch here. Let me erase that one. Short term, there's a little bit of resistance around this 350 to 352 level, closer to 352, in fact, right here. And then after that, I think this is your next little area right here, which is around 357-ish, 358 on the charts. All right, and again, how much more upside? Well, I think what we do is we look for resistance and then look to the time counts. And again, we're into a time count tomorrow, so whether we push up into a level and then reverse, we'll have to see. But that's kind of what I'm leaning towards, is maybe a little bit of a push up tomorrow and then a reversal after we do certain things like touch the trend line with the time count. Tesla maybe piercing 1,000. I mean, who knows? Maybe with a close today, it actually pushes up to 1,000. But either way, those type of things are what I look for to kind of give me the probabilities of where a pullback could come into play. Taking a look at the QQQ, Q's another monster move. Again, we had that small down day yesterday, then off to the races today. You do have some resistance levels coming in on the Q's. See all these little pivot areas right here? Just put that in right there. That's a little bit above current price, so you're looking at around 360 on this. Currently, we're trading around 357.50. So again, maybe another couple dollars to the upside. Again, the QQQ is up about 2.13% on the day. After that, we'll have a little level right here, okay, which is about 366, we'll call it, and then the 370 level would be your next spot of resistance, all right? So again, those are the major resistance levels. There are potentially some other ones we can also see if we zoom out on the chart, but again, I think generally that's what we're paying attention to at this point, and I think we'll stick with that for now. All right, again, we are technically back inside of this range, right? So this was that longer term. If you look at this longer term low trend line, here we broke below, but now we're getting back in. But, and this is a key one, but ask yourself, has it confirmed above this trend line? And the answer is no. Just like over here, we closed above, didn't confirm, closed above, opened above, and didn't confirm. Again, no confirmation yet. We can't have confirmation on this chart till tomorrow at this stage. So, yeah, just some interesting stuff on the charts. Definitely, an epic big bounce in the market. But, again, is it sustainable or is it just a bear market rally? And again, we'll probably find that out sooner than later. Now, speaking of this, can we get, and I got all these lines from yesterday. Let me get rid of some of them. And again, this one's probably a pretty cool one to see, but for now, we'll get rid of it. I'm still looking for potentially 212 on the IWM as a potential shorting opportunity. So again, definitely be a heads up on that if we get up to there, I will look to pull the trigger. Probably I'll buy TWM. TWM is a 2x inverse ETF and easy for us to just buy it. And again, you can see the pullback here on TWM as the Russell has moved. Again, it's 2x inverse to the IWM. All right, so let's take a look at, let's go to Bitcoin first. So Bitcoin in the overnight had a big move up. It did make a short-term higher high, so here was your last high. Now you've pierced it and taken it out. Now we are retracing a little bit on the candle, but still you have a higher high. Now in the bigger scheme of things, you're still inside of this wide range here, this channel, which is ultimately bearish. But again, with a higher high, could we go to the high end? Yeah, that's a decent chance of that happening, I would say. So again, watch it closely, but I am angling for potential upside here on Bitcoin, maybe a little bit of a continued push over the next few days. Maybe that coincides with the NASDAQ pushing up a tiny bit more like we've been talking about. But again, I think it's in essence, it is a period of time where Bitcoin is running out of time. And what I mean by that is that in terms of consolidation patterns, as of today being March 22nd, it basically matches this consolidation before this big move started. All right, so again, basically from this low, you're now at 2 months. From this low, this beginning move was 2 months. So again, it doesn't guarantee a move, we know this, but it does give us kind of a heads up in terms of time factors that you may be coming into some sort of bigger move on Bitcoin. Again, my guess is it could be a move up initially and then a fake out and a move down. One of the things that bothers me on Bitcoin right now is that we've had such a massive, let's just go back to the Qs chart, right? So look at the Qs chart. Look at this epic move up and then flip back to Bitcoin. And we know Bitcoin's a risk asset, but look at this meager move up on Bitcoin relative to the QQQ. That's an issue. Qs, the Bitcoin chart should be ripping up beautifully. It should already be at this high, if not higher, per the risk on trade with the NASDAQ. So that is troublesome to me. And again, I think it speaks to further issues that Bitcoin will have in the chart in the coming months, likely with the breakdown that will eventually occur. All right, let's take a look at gold today. Let's see here. So gold pulling back just a little bit, again, makes sense with a risk-off trade. Now, again, are we consolidating here in a bearish manner? It's tough to know, but that's my guess. Again, I think ultimately what we're going to see is a retrace still to the key level here. And again, the key level being around that 1875 to 1840 level. The lowest you probably would go would be to this trend line here. The highest maybe where I would start to accumulate would be around 1870, 1875, which would be this pivot. But anywhere in this range, I think at that stage, it is a very solid accumulation point. All right, so again, that's kind of what I'm thinking at this stage. I still think at some point, who knows when, but at some point something will shift in Russia. I mean, how long is this going to go on? I guess it could go on for a really long time, but that would be the perfect catalyst. You always think about as a trader, well, if this is going to get here, you have to have a risk on trade, which would sell gold off, since risk off is a gold accumulation point. And in that case, then you have to say, okay, well, what's the catalyst to that happening? Well, the only obvious one that I know of is that, there would have to be some sort of peace deal or something going on with Russia and Ukraine. All right, let's flip over to the silver chart, then we'll get into the oil chart. The oil did pull back just a little bit today. We'll touch on that. But again, same thing, still looking for down here on silver, which is, again, now it's, really it's closer to 23.75. So initially, this trend line was closer to 24. It's now closer to 23.75. Nice little down day on silver today, but we still haven't broken this short-term low. Again, this is where I will likely be a buyer of silver should it get there. Okay, lastly, oil. All right, let's take a look at that real quick. Oil, again, a little bit of a pullback here. And again, nothing major, just a slight pullback. Again, we know we came into resistance over the last couple days. You had a 3-bar surge up. Classic retrace after an unbelievable sharp move up, sharp drop, now a sharp retrace. And again, generally, what I'm thinking is that you're now going to get the next move down this way in oil. So again, thus I picked up the SCO. SCO up a little bit on the day. We're basically, flat to down 10 cents on it, give or take, on the SCO. But I think we're positioned nicely as we were patient in terms of getting back in this trade right up in this range and then getting a little bit of a pullback in oil. And again, I do expect that pullback to continue. People have said to me, well, is there a possibility that oil could go higher? The answer is, of course, there's always a possibility. But I'm having a hard time coming up with a scenario where oil, what's going to happen to make oil go higher, right? You already have the sanctions on Russia, the banning of U.S. imports. What else could there be, right? Obviously oil prices here are going to slow the economy a little bit. The Fed's doing that as well by raising rates. OPEC's not going to cut production. Maybe they won't increase, but I doubt they're going to cut production. Then you have the potential for, like we mentioned before, a deal with Iran or a deal with Venezuela or something else to increase production. So it's, but what's the other catalyst to maybe seeing oil pop? I honestly can't think of it. I'm sure there is one. There is always one, right? But honestly, I'm having trouble thinking of it at this stage of the game. So to me, again, yes, there's always a small percentage that oil does push higher and take out 130. Charts aren't telling me that, but there's always that possibility for sure. Okay, so that's really what we have here on the chart. And again, we'll watch to see how things play. Let's go to the Qs chart one more time here. Qs remain just off of the highs of the day. If we go back to the 10-minute again, you can see we dipped just a little bit here. We're just hovering underneath this high of the day. I don't really see much on the intraday that's giving me much information about tomorrow immediately. We're hovering near the high, so we could easily gap up. But then again, any sort of negativity in the overnight could flush the futures pretty quickly. The one thing I would mention is the volume is very light today. I haven't really touched on volume lately because volume has generally been very, very good. But that is not the case today. Take a look at today. So today we have about 30 minutes remaining in the trading day, and we've only done 54 million. So this is probably the lightest trading day we have seen in quite some time. I would say almost in all of January and February and March, this could be the lightest trading day that we have had. For those of you that are new, light volume when you have a big update is not healthy. What it tells you is that big traders, big investors are not buying. Right now, it's not to say they're not buying a little bit. You never know if they're buying a tiny bit. But obviously, like a bunch of hedge funds are not massively accumulating today, or you'd see a lot more volume in the market. So Generally, what that means is that small investors are getting coaxed back in the market. And that's, again, something that you need to be very concerned about because, in general, small investors are not the ones that end up winning, right? They're the ones that end up kind of buying at the highs, and then they're the ones that sell at the lows in panic just before the market turns around. So again, it doesn't give us an exact top here, but it is something that we want to pay attention to. 54 million with 30 minutes left. I mean, maybe we do 63 million today. But again, if you look back at the average volume since the start of the year, it's probably around 100 million. So we're going to do way, way less volume than that today. And that, again, is something that I'm kind of paying attention to here as, okay, is this the calm before the next big move in the market? Are big, smart investors just slowly selling in to this kind of run-up and then looking for that next flush to the downside? We'll find out. All right. Have a wonderful rest of your day. As always, folks, you guys take care. Thank you for being members.